Hello, my name is Kendra Simcox and I am the CEO here at AlphaMind Technology. Our mission is simple yet bold. We look to enable every user with a powerful device to achieve powerful results. I am here with the company's co-managers to provide a thorough presentation of the successes from all of our decisions made within the past 6 quarters. To begin, we will start with Colin in our marketing department.
Thank you, Kendra. My name is Colin Cassette, and I'm the VP of Marketing. I'm going to be going over our first 6 quarters with you. Specifically, I'm going to be comparing Q2 to Q6. This first slide is going over the advertising and brand review of Q2. We started off Q2 with 2 advertisements, one for our Mercedes product and one for our Workhorse product. For our Mercedes product, it ended up scoring 3rd in the ad judgment, and it tied for 2nd in the brand review. And for our Workhorse product, it ended up tying for 1st in our ad judgment and 1st in our brand review. So both coming out the gate started out pretty well in both segments. The next slide is going over advertising and brand review for Q6. Q6, we had 2 Mercedes advertisements, 1 Workhorse advertisement, and 1 Traveler advertisement. Our Mercedes, we had 2, our Alpha Pro Plus scored 3rd in the ad judgments, and our Alpha Pro Max scored 5th. And then for our brand review, our Alpha Pro Plus scored 2nd, and our Alpha Pro Max scored 6th. So our Alpha Pro Max didn't perform great, but our Mercedes, compared to back in Q2, was kind of more still in the same range in Q6. For our Workhorse product, we just had one, the Alpha 4. It scored 5th in ad judgments and 3rd in the brand review, which was not bad for Workhorse since it wasn't our main priority. And throughout the remainder of the 6 quarters, it was always kind of middle of the pack, so kind of what we expected. Traveler, which was something we introduced halfway through the last 6 quarters, it scored 4th on the ad judgment, but it did tie for 1st in brand review, so we actually did create a really good product for that. This next slide goes over the world market and the market share. It's comparing Q2 to Q6. It's also going over the pricing. So as you can see, for our Mercedes products, which is the Alpha Pro Plus and the Alpha Pro Max, in Q6, our prices went up a lot compared to back in Q2, where our Alpha Pro, which was our Mercedes product, was only at $3,500, where our 2 new products in Q6 were both in the 4,000s. We had no problem selling our products, and due to the high quality of the Mercedes product, which is why our price went up so much. As you can see, our Workhorse product, the Alpha 1, which is back in Q2, eventually evolved into the Alpha Pro, which is the newest version in Q6. The price did go up, but it's still in that Workhorse range where the Workhorse customers didn't feel it was too expensive. And our Alpha Go Plus that we have in Q6, which we didn't have a Traveler item back in Q2, it's sitting right at the little over 3,000, which is very much what the Traveler consumers enjoyed and liked. When you compare Q2 market share to Q6 market share, you can see in Q2 that we did very well coming out the gates. We took majority of the market overall, and then in both the segments we had at the time, the Workhorse and the Mercedes, we had the majority in Workhorse and we dominated the Mercedes. And then when you go forward to Q6, we are still do hold a good portion. We aren't first. Plankton, who's our main competitor throughout, holds, they outperformed us in both overall Workhorse and Mercedes. but we were still right there at the top, second in most categories. So even though with our advertising that didn't perform great throughout and was kind of up and down throughout these 6 quarters, we still always remained towards the top. Here's our marketing effectiveness. You can see that in Q2, our marketing effectiveness is just slightly above average, which is good. And then when you look at Q6, we were also slightly above average. Actually, I'm sorry, we are below average. And then when you go to our cumulative results, we actually scored last as of Q6. So that says a lot. There's a lot of room for improvement. I think a lot of this has to do with advertising. I think in the beginning we did well with advertising because we were able to see what our competition was doing and kind of go based off that. But as R&D features were introduced and we were able to upgrade our computers, it was more difficult for us to keep up and go based off what the other companies did for their brands because their R&D features were different than some of ours. So it became more difficult we had to be more creative, and we couldn't necessarily use the competition's feedback that we got, and because our products have become different and separate. So I feel like with the improvements of our advertising, we will be very successful. I think that is what kind of kept us down. Our brands had been good for the most part every quarter, performed well, were well received. Our biggest thing, I think, are advertisements that we need to improve on, and I believe we will. Now I'm going to pass it to Kendra, who is the VP of Sales.
Thank you, Colin. Hello, everybody. When this company came together, I was tasked not only with the role of being CEO, but also with being the VP of Sales. The responsibility that I hold in the sales department may seem obvious: to generate sales revenue for the company. In order to do so, I believe that the sales team needs to truly believe in the mission statement. Here in the sales department, the key to success is and has always been in the sales associate. My highest focus as VP of Sales is to make sure that our sales associates are happy. I believe that a happy sales team will be the #1 component in generating higher sales. In Q1, the sales department decided to open our headquarters office in Chicago, Illinois. Once it opened in Q2, we decided to hire a total of 4 sales associates that were trained appropriately towards their target market. We have a training and hiring process that is extremely thorough, with continued follow-ups from leadership. Not only was the training enjoyed by all associates, we also taught our mission statement to the sales associates as if it were a passion. Through this training process, with each sale, our associates learned and was able to provide the world with quality computers with exceptional customer service. Through the next quarters, we hired even more associates that went through the exact same training processes. In total, in Q6, we have 28 sales associates throughout all sales office locations: Chicago, Sao Paulo, Shanghai, and in our web sales center based out of Chicago. In order to accurately hire enough associates, I looked to our top competitors, Pekainen and Prestige, to see how they hired associates to generate even more demand. Our company seemed to be just one step behind the 2 competitors, but by following what our competitors chose to do, our sales associates were able to sell a total of 8,137 units in all 6 quarters combined, with an overall total revenue of $28.3 million. Next, we will have Daniel go over how our operations are going in human resources.
Thank you, Kendra. My name is Daniel Zaharczyk. I'm the VP of Human Resources here at AlphaMind Technology. So here in my department, we control the compensation for our employees, which then transfers how well they're compensated to how good their production is going to be. So obviously, the higher the compensation means the happier the employees are. That means the more productive they will be and the more motivated they are to stay productive and be happy in the workplace. and the main things that the employees want and look for in their salary or in their compensation packages is one is their annual salary. They want to be compensated well off a base salary. The second thing is the second priority is health benefits. They want that insurance, they want health benefits. The third is their vacation time, how much vacation time they're going to get, and the last one being their pension salary or the pension percentage plan. And so that's the four things that would pile up into an employee's compensation package for a year or per year. And so then we looked at our competitors and what they're paying their employees on an average, and then we looked at us. And in the beginning, everyone was just kind of the same, starting from Q2, where everyone's just kind of being paid the same, similar production. And then as the quarter went on, we start noticing that, hey, obviously the employees that are paid more turn out to be more productive. So around Q5 is when we're like, hey, let's just put all the chips on the table. It costs money to make money. So we went ahead and just started paying our employees really well. Q5 is when we saw that huge jump in paying our employees at a much significant rate than our competitors, which then translated to higher production. So at the end of Q6, we see that in our sales workforce and our production employees, we had the highest production in both of them. Highest production. They were the highest paid as well, but that's how we were able to get highest production. And in the end, especially in our production employees, we were at 100% productivity. So that's hard to even find. And moving forward, we're going to continue to pay them. We're going to continue to take care of them. And we will see what our competitors are doing, but we want our employees to remain happy. We want to stay ahead of the competition. So we will spend money here so that we can make money down the road to sell more products and to make more products for them to be more productive and happy and stay with our company. And next we have Allison in manufacturing.
Hello, my name is Allison Kinsler. I am the Vice President of Manufacturing here at Alphamind Technology. Today, I would like to highlight a few key decisions we have made throughout the quarters in manufacturing specifically that have helped push our company towards being a strong competitor in the microcomputer industry. First, we take a look at the upper left graph titled Manufacturing Productivity, and we'll notice a lot of variation for our company. In Q2 and 4, we were at 100% productivity levels in our manufacturing facilities at the expense of stockouts. In quarters directly following these, you'll see a steep decline in our productivity levels, and this was a result from overcompensating as fear of generating stockouts again. It is important to know, though, and highlight the fact that throughout the quarters, we are minimizing this variation. So our standard deviations from the mean are shrinking, and this just goes to be a strong point in the fact that we are improving, we have more knowledge of the market and our competitors. I'd also like to highlight Pekainen Tech, top competitor in the industry. Through all the quarters up until Q6, our trend was opposite of Pekainen's. We tried very hard to mimic what their strategies were, but it didn't always work out. However, it's important to note that by Q6, we were going in the same direction. In fact, the same direction as other top competitors like Prestige. So that's just another point I'd like to make in the fact that we are growing and we have a better understanding of how the simulation works. And the next graph, bottom left-hand corner, operating capacity, depicts what we have set operating capacity at throughout the quarters and what were our competitors doing as well. So Pekainen Tech, or actually, for example, in Q2, everyone's capacity was somewhat similar, with ours being the lowest, which is why we generated high levels of stockouts. And in Q5, you'll notice a huge increase to Q6 in what we set operating capacity at. And that was a strategic decision that didn't play out exactly how we expected, but we did that because we assumed demand was going to increase by a lot because we had competitive pricing. We had just implemented R&D features in all 3 of our brands, and we had jumped from 20 ad placements to 40 something ad placements. So we assumed we would generate a whole lot of demand and we wanted to be prepared. However, this was not the case, but we are learning and we are now up competitive between both top competitors, Prestige and Pekainen. For the future, we will look towards Prestige Computers because they are the company who seems to be producing at the most productive level, minimal stockouts and minimal cost endured for having excess capacity. In the upper right-hand corner, fixed capacity, this is the trends over time in which companies, including us, decided to make investments in our facilities. In quarter two, all companies decided to purchase just 25 units of fixed capacity. But as you can see, there's a lot of variation over time in which companies were deciding how much should they add, what's demand going to be like. It's complete predictions and just understanding the market. Pekainen did a very good job at staying steady throughout the process. We noticed that, and now we see that in quarter five, quarter six, we made that huge jump as anticipation for increasing demand. However, we were wrong, and now we get to sit on fixed capacity for a while. We're not going to invest anytime soon, but in the future, we will definitely be investing once demand is out there for the market to grasp, for competitors in the microcomputer industry to grab a hold of. And lastly, the bottom right corner, production cost. I wanted to share with you our progress throughout the quarter. So you can see in quarter two, we had very high production cost per unit, but in quarter six, it's low. We're steadily declining. This has come from just a better overall knowledge of decisions within the simulation. I would like to point out in quarter five, we did have a spike. This was because we were afraid that we were going to have stockouts and we didn't have enough fixed capacity. So at that time, we had set operating capacity equal to fixed capacity to meet demand of the market. That's why you see the spike, but we understand that our assumptions are off and we're still learning, but you will notice the steady decline in production cost per unit. And with that, I'll pass it on to Fung to go over financial statements.
Thank you, Alison. My name is Phương, and I'm Financing and Accounting Manager. Today, we will go over accounting and financing activities in the last 6 quarters. First, let's take a look in the cash flow statement. Our sales revenue keep increasing from $500,000 to almost $13 million. We use rebate to promote our products in quarter 3, 4, and 5. We opened a new sales office and web sales centers in quarter 1, 3, and 5. And we also decided to invest it in research and development costs in quarter 4 and 5. As we can see, quarter 5 is the quarter we spend the most for operating expenses, so our cash balance went down compared to the previous quarter. Let's move on to the income statement. Our gross profit keep increasing from $27,000 to almost $8 million. Quarter 3 is the only quarter we have overstock inventory due to overestimate demand. Quarter 4 is the first quarter we got operating profit, and this is the first quarter we have effective activities when there's no holding cost inventories and no excess capacity cost. And our earnings per share and net income at the first time reached a positive number. As I mentioned earlier, quarter 5 is the quarter we spend the most for operating expenses, so our net income and our earnings per share went down. However, it's increased extremely in the 6 quarters. Let's move on to the balance sheet. In general, our total assets keep increasing, except for slightly decrease in quarter 5. We are not a risk seeker, so we did not expand our capacity in early stages, and we have enough money to cover all the operating expenses, so we did not take any loan, neither conventional bank loan or emergency loan. We successfully issued $8 million in common stock, and we got retained earnings $1.7 million. Next, Daniel will take some SWOT analysis for Alphamine Technology.
Thank you, Phong. So here we will be looking at our internal factors, so our strengths and weaknesses comparing from the beginning. So from Q2 up until this point in Q6, kind of like what's happening between what we have done to get to this point from where we were. And so some of our strengths in the beginning was, we took a large share of the market. Right off the bat, we did very well, but throughout the quarter, for whatever reason, in the beginning, we were very aggressive. And that's what we wanted to be as a company as a whole, was be aggressive. And in the beginning, we had aggressive advertising, but towards the end, it's just kind of like we took the market, then we fell back. Then we went again at the top of the market, then we fell back. We were just kind of trying to save money here and there. And so we kind of didn't live up to demand in the market. And then a few weaknesses we had was that we had some stockouts, and our fixed capacity was low, cost of production was high, which, throughout this time we have improved on all of those. No stockouts, we have a great, fixed capacity. Our cost of production is going down, as you can see in our strengths in Q6. Decreased cost per production, zero stockouts, zero unwanted inventory. So we've definitely improved there. And then looking at our external factors, so our opportunities and threats. So in Q2, opportunities, we wanted to attack the traveler market and different locations and stuff like that. So we did just that. We went ahead and about halfway opened up a brand in the traveler market, dived into that, then did web sales and opened up a location in Shanghai, and we just kept exploring and improving. So every one of those bullet points, we improved on. And then threats, it's about competitors, and our top competitor from the very beginning was Pekainen Tech. And here at the end of Q6, they are still the top competitor to us. And throughout this time, they've been beating us. We've been beating them. Then they beat us again. So just kind of been a back and forth. But we always have threats and the fact that our competitors are always improving and always want to be a step ahead of us as well. But threats, we had in the beginning was limited financial resources, which now is not a threat anymore. We're doing pretty good there. We are improving as we continue to gain revenue and make sales. And opportunities in Q6, they kind of don't look the same in a way, but there are where it's not just about opening up a whole new segment, but it's about improving the brands in those segments. And just expanding, just a little bit. So overall, from Q6 up until this point, from Q2 until Q6 up until this point, we wanted to be aggressive from the start, but as the quarter went on, we didn't really do that. We kind of fell back, got a little nervous in some areas, and so we couldn't live up to what we wanted to do in the beginning. And throughout the quarter, we slipped up here and there. Wanted to be aggressive, but it didn't really work out. But moving forward, we've talked about it, and we want to be aggressive. We want to, put our foot on the gas pedal and really make decisions that could be risky but have a high reward. And like we've already mentioned throughout this whole presentation, that it takes money to make money. And so moving forward, we hope to continue to knock out these bullet points of opportunities, to maximize our strengths, and to take away our weaknesses. So and now we have Allison.
Hello again. Not only am I the Vice President of Manufacturing, but I am the Vice President of Business Analytics. So I will be presenting our future plans on behalf of the whole Alphamine team and its co-managers. First, we would like to put an emphasis on issuing more common stock. This is a great way for us to not have to dig into loans if we were to need them, but to generate more cash for the business. And we will continue to do this as we continue to grow. Next, we want to keep investing in R&D. We don't want to wait. We learned our lesson from that. And we want to be ahead on top of the market, not letting our competitors get the upper hand. We also want to create more than 2 brands for each segment. So in the last quarter, we did create 2 for Mercedes. However, we kept just 1 for Workhorse and 1 for Traveler. We don't want to do this anymore. We understand that customers like options. We like options, so we want to give that to them in the future. We will be investing in fixed capacity, not quite yet, but when demand reaches the level that it needs to be for us and we need to get to that point of purchasing more, we will do that. So probably not in the next few quarters, but one day we will be. We also want to expand our sales channels. So we understand that there's market that we have not dove into yet that our competitors have, and we will be hitting that market, as well as hiring more web sales centers people in the future and sales reps in our cities. Because as demand increases, we want to have the personnel to push our product to the demand, the people who want our products, and just inform them and really kind of draw them in to be invested in our products. And lastly, huge emphasis on focusing on continuous improvement. This spans from all aspects of our business, but just to highlight employee compensation. We never want to just keep their salary and their benefits steady at what it is. We want to make sure they are continuously happy, and we'll be increasing it as time goes on, making sure that they're working hard for us and we're thriving as a company. So with that, here is our CEO, Kendra, to close us out with lessons learned. Thank you.
Thank you, Allison. We have a wonderful team here at Alphamine Technology. Through the past year and a half, we have learned a lot of valuable lessons that we will continue to value and will take with us as we progress into the future. At the beginning, as a team, we decided that we would have a strategy that was more aggressive. Although, as we were new to business, we ended up taking a less risky route to achieving our goals. One of the most important lessons that we have learned is that we shouldn't have been so risk adverse. So one of the things that we want to go into the future is be more aggressive. If we were more aggressive like we had planned to be from the beginning, we would have been able to reap more benefits from investing heavily, early, and often. Along with taking less risky routes to achieve our goals, we found that we should have taken advantage of commercial bank loans to help increase our overall profit. Another lesson on this topic is that we should have invested in R&D as soon as possible to reap the benefits that new technology would have on our demand and profit. Going into the future, especially now that we have a solid grasp on business, we will be more aggressive and take full advantage of bank loans, R&D investments, you name it, to grow our profits. Those were the most prominent lessons that the company learned this past year and a half. We also found valuable lessons within our team. Communication is key, and it is outstanding in our leadership team. We have been able to share our thoughts with each other respectfully, and we're able to trust and support one another in all decision making. With this communication, of course, it builds trust, it builds respect, and it builds an overall commitment to each other. We have a lot of fun here at Alphamine Technology, and we truly love our job. With such a strong built leadership team, we are more than ready to take on the future. The world better watch out because we're stronger than ever. Once again, thank you to the board of directors for your continuous support. We appreciate and value having you here alongside us as we build our company. I am proud of the leadership team here, and we thank you all so very much. Thanks.